Welcome to the Law of Fojo podcast. I am Robert Fojo, your host, and I have with me today Myles Wakeham. Myles, thank you for joining me. I appreciate your time.
Oh, thank you for having me.
So Myles is is here to talk with us today about Bitcoin. He is from Australia. Is that correct?
Correct.
He is a regular host on The World According to Ben Stein. He's also has his own podcast. What's the name of the podcast? It's the Unconstrained.
Yep, the Unconstrained Podcast.
Okay. Myles has a lot of experience with many different avenues for creating wealth. Why don't you tell us a little bit about your story and how you got to where you are today?
Yeah. Well, I'm an immigrant from Australia.
Mhm.
I came came to the United States. I live in Arizona. I came to the US in '89 at the age of 25.
Mhm.
I've, for the most part, been here ever since. So most of my work, I began my career as a technologist, as a software engineer back in 1978. So that's kind of showing my age. But I'm one of that first original enclave of people who embraced personal computers when they were first invented. And I've ridden that wave ever since. I've done quite well out of it, but most of my money that I made actually came out of real estate. So when we came to the United States, I came with my wife and an 18-month daughter. And now she's graduated college and works full time and has her own life. And we're kind of moving on to our next chapter as well. So that's in a nutshell the high level summary.
Well, it's wonderful. You along the way, I think I heard on a past podcast episode, your first exposure to Bitcoin was in, I believe it was 2011. Is that
Yeah.
right?
Yeah, about then.
And the reason you bought Bitcoin at the time, I think it was $7 per Bitcoin or something to that effect.
Correct. Yep.
And I think the reason you bought it was because you needed to pay somebody in a foreign country who was working for you, and that was the fastest way to do it.
Yeah, it was.
So can you, and then since then you whatever you purchased, I think you held on to it, but you've had some experience with Bitcoin and you've created some wealth from it. Can you tell us what is Bitcoin and what is it used for?
Okay. Yeah, I can. Well, I mean, Bitcoin is a protocol. It's a technology protocol to enable the communication of value, I guess, the easiest way to put it, from one party to another without having it go through a counterparty.
Okay.
So that sounds really technical, right? It sounds
Right.
all engineering like. Let me tell you the human story of what Bitcoin's about.
Sure.
So, if you cast your mind back to 2007, 2008, the the United States was going through a crisis, the global financial crisis, as we call it. And the reason for that was that we had, prior to, since about 2001, when we had the dot-com crash in the stock market, a lot of money seeked out other forms of safety. And one of the most common places that money went was real estate, and hedge funds started to pump a lot of money into real estate. And at the very time, we had accommodating Federal Reserve policy, lower interest rates, and so on. So people also followed along with this migration of money into real estate. And we went through a period of time from about 2002, 2003 to about 2007, 2008, where the real estate market was euphoric. People would buy a condo for 100K and 3 years later sell it for 200K and thought that they were all smarty pants and, wealthy and whatever. But this was how the world was. And people, were told by our very president, every American deserves to own a home.
Right.
Well, no. Every American does not deserve to own a damn home. You got to work for it. You got to go and put your money down, and you got to do what everyone else does. Why does anyone get an easy break? Well, that's the rational way of thinking about it. But the reality was we empowered a lot of bankers to do a lot of subprime mortgages, to collateralize risk, to take diverse levels of risk from extreme to not so extreme and bundle it and sell it off as this sort of homogenized version of a package of debt. And we lumbered that on other countries, and we lumbered that on ourselves, and then it all came crashing down around about 2007, 2008.
Right.
The time was at a point when I was a real estate investor, so I had a lot of properties back then, and a few of them we had bought right in the 2007 period.
Mm-hmm.
And I was without a chair, and the music stopped. I mean, it was literally that world. And all around me, my friends were getting foreclosed on. My personal trainer at our gym lost his house. I mean, it was just horrible.
Right.
You reached out to banks. Banks didn't want to talk to you. They didn't want to know you. They were getting bailed out. They were too big to fail, but you weren't. So you ended up wearing it all. And you looked and sort of asked yourself, why is this all happening? And if you remember at the time, there were a lot of outspoken people emerging, people like Ron Paul, who was, trying to say audit the Fed and find out what's going on, because this shouldn't happen. The free market shouldn't work like this. And he was right. But the reality was it was this, form of version of itself. And that was, we didn't seem to practice Austrian economics for that matter. So we ended up in this world where, everyone was losing their shirts, and housing prices were half what they used to be. And banks were not popular. Remember Occupy Wall Street, all those guys who just camped out there for like a year or something and harassed the bankers. Well, the banks didn't care. I mean, they still got in their hired limousines and their nice suits and went home, and, everyone else is schlepping out in the parkland. So it was a weird time. Well, right about then, 2008, 2009, some people in the tech business who I was sort of indirectly associated with began the process of trying to find out if there was a better way of doing business. And the better way was to actually use the technology which we'd been inventing and using in areas that were unusual, and to turn it into a protocol that could be used for medium of exchange. Mm-hmm. So I could sell something to you, you could sell something to me. There was no bank. It was peer-to-peer. The reason for this came out of a world of online gaming, of all things. The world of what they call massively multiplayer online role-playing games. World of Warcraft, think of that. Like These games, you immerse yourself in there and you're living in this sort of second life, this virtual world. And of course, in those worlds, you have to do commerce. You have to buy that shield or that sword. And
my son is an avid Fortnite gamer, so I know all about it.
Right. So these new virtual worlds needed economies. And what they ended up doing was they would find a way to on-ramp physical currency to virtual tokens or coins, gold, platinum, whatever it was in the game. And there was a lot of these, what they called exchanges, popping up all over the place where you could spend money and they'd give you back, tokens for that game or whatever. So the world in technology was already well aware of this. The problem is that the rest of the world had no idea what was going on. And then along comes this white paper in 2009, which was entitled Bitcoin, a peer-to-peer electronic cash system. And guys like me who were hating the banks and understanding the need for this virtual currency were looking at it going, ooh, this is intriguing. Mm-hmm. And then you look at it and you go, well, what exactly is going on? Well, it's a very simple answer to a complicated problem, but a problem which has been around us since the dawn of time. If I want to exchange something for value, we have to agree on what the value of something is. And then I have to transfer my holdings of that, whatever it is, token, dollar, whatever you want to call it, to you. And you have to trust that it is valid. And so there's two parts of that. One is you have to trust it's not counterfeit. And the second is you have to trust that I haven't already spent that same dollar with somebody else and yours is worthless, what we call the double spend problem. So in Bitcoin, the way it works is that you have these things called keys, which is like your right to own a token. Mm-hmm. And I send it to you, but it goes when you receive it or before you receive it, it goes through a process of validation, which we call mining. And the way it validates is this complicated math process is applied to this transaction, and it validates that it is in fact unique, and it gets added to a ledger like imagine on the internet, there's this public ledger of transactions. It gets added to the transactions, and that then gets copied around the world to every other miner. And the idea is that if something gets double entered at 2 different locations at once, the last one gets kicked out. And that way you don't get the double spend problem. It's actually absolute genius.
Right.
I looked at it and I thought, math, right? Use math. Like the Federal Reserve, they just print anything they want, right? To abandon. Since 71, there's no gold backing anything. No standard, right? Just print whatever you want. In Bitcoin, you can't do that because math tells you that there is a finite number of Bitcoins that have ever been issued. In this case, it's 21 million. And that every time that you do a transaction, it must be validated and put on the blockchain. And the miners, in order for them to be incentivized to do that job, get paid in Bitcoin. They become their own currency generation, and that Bitcoin goes back into circulation. That's how they make their money. That's how they pay their power bills and incentivizes them to do it. I thought the whole thing was genius. I got into this thing. I said, this is incredible. And then I realized I had a problem of my own that I needed to solve. I had a software developer working for me who was in Bangladesh. Bangladesh is a predominantly Muslim country and had been negatively affected by the 9/11 issues. And so, like most Muslim countries, they were not trusted. And this was particularly true in the case of reciprocal banking agreements. They didn't have one. Whereas I could PayPal somebody and they get their money pretty much instantly. I couldn't do that with this guy. I could send him an email and say, I need you to write me the software, and he could then write me the software and send me the software back, and it was all instant, but I couldn't pay him. I mean, I had to go down to Western Union, stand in line, pay. Oh, the whole thing's ridiculous.
Yeah.
Any immigrant will know this, right? It's weird, but he would think by the time he went and got the money, like 2 weeks later, he only got, I think he lost 27% of the entire transactional value to the money exchanges, to the trolls and the bridge.
Right.
And I'm looking at this going, bankers, bankers. Okay, so what we've got to do is we've got to bypass these guys. So we worked out that we could use Bitcoin so I could pay him. So I did. And so I used an exchange in Japan called MTGOX. I bought a bunch of Bitcoin because they were used to sell World of Warcraft tokens or whatever. But now they started selling Bitcoin. So I bought some from them. And I started, I put a lot of money there because I had to wire that money to Japan. And that was going to cost me like $75. So I was not going to do it for a small amount. So I did it for what I thought was going to be like 6 months of his income, or 12 months, I can't remember what it was, but I put enough money there so there was a balance I could just draw down and pay him. And then Bitcoin went from $7 that I bought it for to $1,200. And I'm going, oh my God.
When was that? Was that around the same time in 2011?
Yeah, it was. And it's weird because in parallel with that, he had contacted me and said, well, I love the fact you're giving me this Bitcoin, and I love the fact it just went up in value so much. So, it's great. We're all winning here. And
Right.
but I can't spend it. I'm like, well, what do you mean? Well, I can't buy groceries and pay my rent. I can't feed my kids. I live in a country of poverty here. I need to be able to feed my So I said, well, I was watching the Kaiser Report, Max Kaiser's show on the RT network. I guess it's gone from there now, but at the time he was the reason why I was watching him was he had the exact same attitude to banks that I had. I had just come out of this kind of negative experience with them, and he was railing on them, and we were all just sort of like, it's this tribal thing, and he had started talking. He had a guy on his show who was from an exchange in Hong Kong who had started an exchange, and he somehow tied your Bitcoin holdings to an account that had a MasterCard, like a debit card. And I thought, this is what my guy in Bangladesh needs, right? So I hooked him up and got him to get a card, and he received it in the mail. And I said, okay, well, I'm moving everything out of MTGOX, and I'm going to put it in this exchange in Hong Kong. Thank God I did, because MTGOX got hacked and everyone lost all their money. So I dodged a bullet. And then I said, okay, I've given you your Bitcoin in your account in this Hong Kong exchange. Go and see if you can go to your local 7-Eleven with your ATM and see if you can get your money out. And the damn thing worked.
That's
and for literally 50 cents for the transaction, he was buying food and feeding his family. And I'm like, I get it. I see the importance of this.
Right. That's fascinating. When you mentioned a couple minutes ago blockchain, then you were also talking about the ledger.
Hmm.
The blockchain is the ledger, right?
Yeah. Yeah.
Okay. And then you also mentioned the fact that it would have cost you, it was going to cost you, or did cost you $75 to send this Bitcoin payment.
Hmm.
And there are similar transaction fees now, right? When you engage
Yep.
in a Bitcoin transaction, what are those fees?
There are and there aren't. Okay, so a lot has happened in Bitcoin in terms
Sure.
of its evolution. I mean, it started out as an open source software protocol, so it could be forked. That's why you have all these things called altcoins. People took the original Bitcoin code and they made a version of it and changed something in it and called it something else. So, Bitcoin Cash, Bitcoin Gold, Bitcoin whatever. I mean, and then people completely rewrote it and made something completely new out of that, based on the original principle, like Ethereum, for example.
Right.
And this is why you see, thousands of altcoins out there. It doesn't mean they're any good, but but what it does mean is that the open source community is alive and well, so that's good. But in the case of Bitcoin, to fast forward a fair way through, we got to around about 2017, middle of 2017, and all of a sudden, the popularity of Bitcoin skyrocketed because the price went from, it went to 1,200, it crashed down, and then it went way back up again, and it got to like about, I think in 2017, it got to like 20K.
Yeah.
Which is amazing for somebody who bought something at $7 and it goes to 20K. You're like, wow.
So is it? And I remember at the time my Facebook feed was just flooded with people talking about Bitcoin and what a great investment and this and that. It wasn't intended to be that, to be a speculative investment or buy and hold investment, though, right?
Yeah. We humans got flaws. There's a lot of it's called greed and FOMO, fear of missing out. It goes back to our days of prehistoric cave dwellers, but the reality is that we have all these psychological flaws that make us do things like, if we think we have something of value, we hold it like a dragon guards its gold. We don't spend it. And for a protocol which was, white paper was titled Bitcoin, an electronic peer-to-peer cash system, that's all about transacting. That's not about holding. And yet the general rule of thumb was that we had to hold our wealth because we were being threatened at all angles, threatened by government, threatened by banks, threatened by all of this. So everyone just hunkered down and held their wealth. And everywhere you look, somebody was going to tell you, oh, it's going to go to zero. You're mad. Get rid of it, But no, the faithful held their gold and held their Bitcoin. And those that did currently did very well. But in 2017, you're exactly right. The gears of the miners started to slow down because the volumes got too heavy. Too many people got in on this thing. Mining fees went way up. It cost a lot of money to do a transaction. And then along came a sort of a patch to the Bitcoin code called segregated witness, which is what they call a side chain. Now, the easy way of thinking about this is that if I transfer money to you via a banking system, if I wire you that money, it goes through the SWIFT network and takes days to get credited into your account, but you'll get it. But if I was to use a credit card, you would get an immediate approval of receipt. The transaction would be immediately credited to you, but you would wait 72 hours before it drops into your bank. But you'd be okay with that because you knew it was coming.
Right.
That's called a side chain. It's not the core. So Bitcoin built the technology for side chains, so you could have these parallel transactional flows going to and from people, and then eventually settle them back into Bitcoin. But the miners didn't like it because the miners were making bank on doing all of these big mining fees, right? So they pushed back and they pushed back, and we in the Bitcoin community, especially the OGs like me, we're going, no. The whole point of this is about transactions. It's not about mining fees and holding and all of that. I mean, it's about transactions. And eventually they gave up. And then what happened was we had side chains which dropped the mining fees and enabled everything to flow again. And then that further expanded over the last couple of years into what we now know is called the Lightning Network, which is in effect a version of merchant processing that sits on top of the rails of Bitcoin. And that is why countries like, for example, El Salvador completely adopted Bitcoin as an actual legal tender, as a currency. And you can go into El Salvador and buy anything from anybody and pay with Bitcoin, and the transaction is settled instantly, all because of the Lightning Network. And it costs, quarter of a penny or something to do it. It's cheap.
So what is preventing? Well, let me ask you this: Bitcoin isn't being used like that on a wider basis, though. It's not being used as a mode of transactions right now. It's still mainly a buy and hold mechanism or strategy, and people are continue to buy it based on speculation. Is that accurate?
Yeah. There's a couple of reasons why. One is the human factor of holding wealth. People don't want to give it up if they think it's going to go to the moon, as they say, or go to 100,000 a piece. Why would you ever want to spend your Bitcoin? So there's that. The other part of it is vendors won't accept it until small businesses where you buy a cup of coffee or a pair of shoes will accept payment in Bitcoin. It doesn't meet the medium of exchange, so really it has no value in that area.
That makes sense.
Unless you're living in El Salvador.
Right.
And then the worst part about it, and this is the thing that kind of irks me the most, and part of the reason why I sold a lot of my Bitcoin holdings, the governments don't like it. And the governments don't like it because the governments like the ability to surveil and track the activities of their citizenry. And in this particular case, they're tracking the activity of transactions to determine behavior. That's happened since the dawn of time, really. But at this particular case, we have a transactional mechanism in our existing monetary system in which governments feel that they have stranglehold over the flow of money. Case in point, Russia. We are fighting Russia on the basis of sanctioning their monetary exchange. And that's a powerful weapon on behalf of a government. The problem is it denotes and it negates the individual's right of privacy, the individual's right of freedom, and the individual's right of wealth generation without having a counterparty involved in every single thing they do. Exactly that, it negates Bitcoin. The basic underlying tenets of an open source protocol, a peer-to-peer electronic cash system, is exactly juxtaposed to what our federal government would want.
Right. Well, that's one of the questions I always have for people, especially all the so-called Facebook experts who advise you to buy Bitcoin, get into Bitcoin, and so on and so forth. What prevents the federal government or any other country's government from either banning it or co-opting it or developing their own digital currency to try and replace it or replicate it? What stops the government from doing that? And if that were to happen, wouldn't that negatively impact the value of your Bitcoin holdings?
It would, because Bitcoin follows a true Austrian free market economic principle of supply and demand.
Right.
Perception is value here. I mean, if you perceive the value of Bitcoin's worth 100K because there's a finite supply and the supply is shortening, well, then great, that's what it's worth. If you think Bitcoin's worth nothing because governments will outlaw it, then that's what it's worth.
Right. Yeah.
And the reality simply comes down to what you believe it to be. And I don't think people take a personal stake in it. They look at it from the point of view of what their brother-in-law told them, or they knew this guy who got rich on Bitcoin or whatever. Well, I did. And I can tell you right now, you need to understand what the hell you invest in the same way that I wouldn't buy, tulip futures because I don't understand that market.
Right.
I was lucky enough to work in technology, so I could understand Bitcoin. But it took me time. It took me time to understand it, to get it, to go down the rabbit hole with everybody else and to realize the significance of this, but also to realize that from a geopolitical system here, Bitcoin is like investing money in the Cayman Islands. Sure, you can do it, but you don't know at what point in time their government's going to change their attitude and your government's going to change your attitude to whether or not you can bring that money home again.
Right. It's like investing in volatile countries like Cuba or countries with unstable governments, where if you make an investment, if any change in that government's policies or the way that that country's being governed could obviously impact the value of your investment, right?
That's very true. And I would say this. I've learnt this one the hard way. I've been a capitalist since I was a kid, and I still am. What I had found is that if I had followed the social mantra of putting your money in your 401k and your IRA and your stock markets and whatever, and just waiting it out, and hopefully when you're 65 you can retire into the sunset,
Mm-hmm.
I would be destroyed. And I think, unfortunately, this is part of the thing that I teach on my podcast, is that most people who did accept and embrace that social mantra became victims to it. They didn't become winners. The
Mm-hmm.
winners might have been somebody in, say, 1955, post World War II, when gold standard existed and money was a higher interest rate, so people were less likely to squander it. Back in those days, yeah, they probably could have won, but today it's a very different game. I never made my wealth doing what everybody else did. I had to, when there was a burning building, I made my money going into the building, not running out of it. And it's been the case with my work around the world. I just bought a very large land holding in Mexico. I go into where the action is, and I transact, and that's how it worked for me. And I don't measure my returns in a 10% annualized return or a 20% annualized return. I measure it in 10 baggers, 20 baggers. I want 10 times my investment, 20
Right.
times my investment. On Bitcoin, I made 1,800 times my investment.
That's incredible.
Yeah. Now, I could say, okay, that's a once in a lifetime speculation. No, it's not. If you follow the exact same principles of seeing something, understanding it, recognizing it, and not being as scared of it, then you too can have similar returns, whether it be buying palladium or buying Bitcoin or buying real estate or business shares. I don't know. You
Yeah.
just have to be willing to do it.
What well, is the limit of the number of Bitcoin that are available, that exist, is that something that could limit, for lack of a better word, its ability to be more widely adopted or distributed?
Not now we have side chains,
Okay.
because you can, I mean, it's like saying we've got a gold standard on the US dollar, so there's a limit on how much currency can be injected or printed in the market. That doesn't mean that currency can't still circulate. I mean, wealth transfer still exists, whether there's a gold standard or not. It's just whether you're willing to push more currency in and effectively dilute the value of the existing holdings that are out there. You cannot do that with Bitcoin. Protocol won't let you do that. You can do it with fiat currency, currency by decree. You can do it in that form, but you cannot do it in Bitcoin. And that just means that what is out there, and it will, finite supply does tend to denote value, but it
Right.
only denotes value if people perceive value of it in the first place.
Right. These side chains that you identified, they make the transactions more instantaneous. Do they
Yes.
also limit or reduce or eliminate the transaction fees associated
Mhm.
with those interactions? They do.
Yes, because they don't really even need miners for the most part. I mean, using Lightning Network, it's like a pre-existing block of money you've got, and to a wallet that doesn't, and it's just like me sending an email. That's a bad example because you need an email server. It's
Mhm.
like me texting you. Okay, your phone ding picks up the message, and you text me back. My phone ding picks up the message, and yeah, it did go through a telecommunications exchange, but it was pretty much instantaneous. Well, think of Lightning Network in that nature.
Okay. Is the Lightning Network and these side chains, is that in your podcast episode from last year in which you discussed Bitcoin, you talked about there being a need for you called it a killer app or some kind of mechanism to make it more commercialized, and you had analogized it to the introduction of the World Wide Web for the internet. That's what prompted the internet to take off. Do we have that already with these side chains? in this Lightning Network, or are we still looking for something like that?
We do not have that, and the
Okay.
reason is that the average vendor out there is not able to. So let me give you an illustration of that.
Sure.
If I own some Bitcoin, say about $100 worth of Bitcoin, I can sit on that and do nothing with it and hope that it goes up. Maybe it goes down. I don't know.
Hmm.
But really, what I want to do is I want to buy pizza.
Yeah.
So, okay, I want to buy pizza. I got Bitcoin. I don't have any cash. How do I get the pizza? Well, I'm going to go to the pizza maker, the pizza vendor, and I'm going to say, "Would you accept Bitcoin for your pizza?"
And he looks at you like you're speaking a different language.
Right on. Yeah, he says no, and I won't accept Mexican pesos, and I won't accept, no, I accept US dollars. Give me US dollars, and you'll get your pizza. Until that guy says, "Yeah, I'll take Bitcoin." Until he does, all we have here is a kind of a concept of value, a perception of value, nothing more than that. Thankfully, we have millions and millions of people right now who perceive that it does have value. And there is, I think, something around $3 trillion of value inside of the Bitcoin blockchain space in terms of wealth that's sitting out there right now. But it's nothing compared to what is sitting in Visa and MasterCard or Amex or a country's, sovereign wealth. It's nothing. So we have to be realistic that until small businesses, Walmart, Amazon, and so on start accepting Bitcoin as a form of payment, the value is completely speculative.
It's funny. It's interesting. I had a client. I've been an attorney for 17 years. I had a client 2 years ago who asked me if I would accept a retainer in Bitcoin as opposed to US dollars. And at the time I said no. Once that would have been converted to revenue, I probably missed out on a 5-figure appreciation on that. That being said, what would it take for small businesses, or what if anything is going to prompt small businesses to accept Bitcoin as payment?
Right now, if they accept a credit card, they're paying between 2 to 3%, sometimes more, in terms of merchant fees to process that transaction.
Mm-hmm.
In the case of Bitcoin or other cryptocurrencies, realistically, they could do it for 1/4 of a point or 0.5% on their fees. So they would actually make more money if they would accept it.
So is it just lack of knowledge, lack of education on the distinction between the two?
It's that and volatility. They've seen a currency where the price has gone from $7 to 50,000, and that's
Right.
great. But at some point, it could go from 50,000 back to $7, and they don't want to get stuck, in the middle with holding the bag.
Right. Yeah. Right now, today. So today is April 8th, 2022. Bitcoin is at $42,630 per Bitcoin. And that's, the last 6 months, that's obviously come down a little bit. It's come down a bit since the high, whatever that was. Do you see the government either developing some kind of oversight for Bitcoin or trying to interfere with it in any way in the near future, if at all?
Yeah, I do. I think it's fair to say that, and I'll talk in terms of the United States government and
Sure.
what we know of in terms of behavior and so on. But government policy, particularly in congressional areas, legislative areas, is driven for the most part by lobbyists.
Mm-hmm.
And so as a result of that, some of the largest lobbyists that we've got out there, other than areas like energy and things like that, are banking. And the banking sector does not want anything that threatens. Okay, so at last count, if I remember this, 42% of GDP, US GDP, is going purely into financial services. So if you can imagine that 40 cents of every dollar that we make
Right.
as a country came from moving the money around. We don't actually build anything. We just moved it around and
It
extracted
seems incredibly
fees.
wasteful. Seems incredibly
Yeah.
wasteful when you think about it. Yeah.
Well, when you're dealing at those sort of levels, they have enormous lobbying power in Congress.
Yeah.
And so it's very easy for bankers to, do lunch with the right senator representative, whatever, and to try to push forward a policy that you need to kill that Bitcoin off because we can't make any fees. When they're making 3% on a Visa transaction and you come along with one that takes, 0.25%, they're going to freak out. The competition would kill them, but not if you could somehow make the competition look, poisoned and damaged. So that's been the mandate of the banks. Eventually, at some point, around about 2017, after the banks went through what we would call their 5 stages of grief in dealing with this, they got to the point of acceptance, and then they got to the point of trying to co-opt. And at that point, you had major hedge funds, you had Goldman's, you had JP Morgan, all coming in and buying up big swags of Bitcoin to ride the wave, pushing the price to where it is now. That didn't happen by organic growth. That happened by hedge funds and big institutional investors. Yeah. So now what happens is those institutional investors have got some skin in the game, but at the same time, there's far more for them to gain if Bitcoin fails than it is for them to succeed with it. So they will lobby and they will use all of the representatives' power that they can to change the law. And one of the things that they're doing at the Federal Reserve level and with Treasury, I mean, let's face it, the Secretary of Treasury used to be the chairman of the Federal Reserve. I mean, they're one in the same thing. It's a cartel. It's one in the same thing. So if you have that sort of power, all you need to do is to get a whole bunch of nerds who can program and take the open source code of Bitcoin and create a private version of that and call it, CBDC, central bank digital currency, because, China did that, so we better do that as well.
Yeah.
And so that's what's going on right now. There is very active work being done at the Federal Reserve and with Treasury in the open, it's transparent, where they are looking at putting out a CBDC. Well, if you were to do that and you have legislative oversight and legislative power, you can tell anybody who threatens your position, knock it off. And they can, and Bitcoin would threaten that position. So I would be cautious, not because Bitcoin doesn't work, not because it's not a great thing, not because it hasn't served me well, but because can you fight the US dollar? Can you really fight and win the US dollar? It's the world reserve currency. And do you really think that a mob of anarcho-capitalists and cryptographers who invented Bitcoin have the power to fight the federal government of the United States? I mean,
don't think so.
I don't think so.
Unfortunately, yeah.
Yeah, and I think at some point you've got to pick your battles. And at this point, maybe they fought a battle, they won in the short term, but they're not going to win the war.
As far as the war and not winning the war, is there any way that this could proceed whereby the concept of Bitcoin and the purpose for which it was intended eventually win out, where there's some open source, decentralized system of peer-to-peer transactions that people can trust that's outside of centralized government control? Is there any way that this could win out?
Only if vendors accept Bitcoin so you can buy a cup of coffee with it. That's the only way.
Yeah, that makes sense.
Yeah. And if you look at the reasoning why El Salvador took Bitcoin on as well as a currency, it's because of the long history that they have in what the US government has done to them in terms of wealth stripping and in terms of CIA manipulation at government levels. And you look at the whole history of it. If you ever want to study this, look at the Economic Hitman book, John Perkins' book. Incredible stories about what has happened over decades of infiltration in government to overthrow government, overthrow leaders, and so on. And as a result, Central America doesn't trust the United States. So the last thing in the world they want to do is to be in bed on their currency with them.
Yeah.
So this was a political move on their part from a survivalist standpoint. And if you want to see Bitcoin survive, move to El Salvador. I mean, at some point, it's going to come down to that. People are going to have to look and say, there's one thing I can argue a good game on principles and on philosophical good ground, and I want my freedom, I want my liberty, And I don't want the government surveilling every transaction. Well, unfortunately, that's happening. I don't want George Orwellian Big Brother 1984 society. Well, sorry, that's happening.
Yeah.
I want to be able to, travel freely. Well, yeah, but you need a passport. You need, so there's all these. I mean, you're in the legal business. The system that you have to play in, the rules of your world were set up with a spirit in mind, with a reasoning in mind by legislators that want control. And if they want control, the biggest thing that threatens their ability to have control is money. I have traveled the world. I have been to places. I went to Venice, Italy, and stood in the town square in the Carnegie where banking was invented. And I stood there in this quiet, unassuming piece of land, feeling like I got it. I understood. And here's the thing, which people don't understand. And I'm not trying to be a rebel or for people to rise up. I'm just saying for people to wake up. The reason why banking existed was because the Jewish people in Venice, Italy, put their middle finger up to the Roman government, who said that because of the Bible and because of the New Testament, you may not lend money to somebody. And because of that, the Jews said, we don't subscribe to the second book. We'll only go with the first, and we can lend money to Gentiles without any problem at all. And we will make sure your farmers can borrow money to plant seed, and your farmers can get labor to toil the ground and harvest the crops, because the city of Venice needs to eat. And we will be the hack in the system that will allow that to happen. That's our history. That's what created banking. If we don't recognize it came out of a whole bunch of rebels who were breaking free of a dysfunctional system, that's how history is made.
Right.
The people in Bitcoin tried to be those rebels. The question is, are they able to fight, Caesar? Are they able to fight? And I don't think they have that power. I would love to be proved wrong.
Do individuals like Elon Musk and Peter Thiel, Elon Musk last year famously, he tweeted #Bitcoin. A couple of days ago, there was a cryptocurrency conference in Miami, and Peter Thiel attended, and he vilified Warren Buffett and New York bankers as preventing Bitcoin from doing a 100-fold increase. Are they helping or hurting the sustainability of Bitcoin as what it was intended to do?
They can't be doing anything bad by shining a light on the dysfunction of an existing system. But at the same time, there needs to be people who understand why things are the way they are, and that there's always an essence to something. And those people were not Bitcoin evangelists in 2009, 2010, 2011. They weren't out there talking Bitcoin up then. Elon Musk was doing the PayPal thing. Thiel was doing the same. They were part of the banking problem. And it's kind of hypocritical for them to come out and fly the flag of Dogecoin or whatever they're doing these days when they were part of the problem in the first place. So I think that people who get it understand that.
Sure. Do these other altcoins like Dogecoin, and do they have any value at all? What is the deal with those?
No, they don't. I think they're just trying to use anything that may not be limited by supply and therefore could be cheaply used as a transactional form. And for that matter, there's value to that. But at the same time, I'm not exactly sure whether that's the right vehicle. It's interesting. The IMF put a project out this year to try to create a green energy version of Bitcoin, and have been working on a project that will use a thing called Chia as a token to handle IMF level transactions. But not much press has gone on that. But one could argue that maybe Chia is a good form of transaction if the IMF are behind it. And, they don't want to have carbon in the atmosphere, so they're trying to do it with forms that don't create a lot of energy problems, which Bitcoin mining does.
10 years from now, does Bitcoin still exist?
Yeah, but I think it exists in the same way that shadow banking exists, and I think it exists in the same way that countries like Malta, Belize, the Cayman Islands, where you can, get some anonymity, the Cook Islands. You can use it as an asset protection shelter. It will exist as a counterweight to a far bigger, system, and that will probably be a digitized central bank digital currency, a world coin, a gov coin, if you like. And I think maybe its value will be diminished just because it can't. People, you and I will look at it and say, well, if I'm going to pick where to put my wealth, am I going to put it on that, or am I going to put it on something the government tells me has got value? I'll stay with the government. And I think that's going to be the death knell of Bitcoin. I would like to think that maybe it morphs into something else. There are privacy coins out there which are pretty much you can't they're totally anonymous in the transaction and they can't be stopped, like Monero, for example. But they require such a technical prowess to be able to manage that sort of a wallet that it becomes almost impossible for grandma to use it. So again, you can have currency, but you've got to be able to spend it.
Yeah. This last question, this concept of blockchain technology, what other applications could it have outside of a peer-to-peer currency transaction?
Yeah, that's a very interesting one.
And I apologize if that's beyond the scope of.
No, it's not.
This discussion,
it's a very interesting one.
Yeah.
Blockchain ain't all that special, I hate to tell you. We have had blockchain for decades and decades and decades. We call them databases.
Registries,
yeah. Right. When you register your car, it's in a database and it's on a registry. When you buy land, it's the same. If you get married, it's the same thing. The fact is that those that own the databases know that they own the power of everything, and they won't give that power up. And that comes down to both private sector and government. It's the same. And so to say, well, blockchain's this beautiful public ledger that everybody can see and it's transparent and we can all agree. Yeah, but you really don't understand human beings, do you? You maybe take a course in psychology here, because I'll guarantee you that ain't going to happen.
Yeah, human beings are just fundamentally flawed. We're all fallible. People always believe. I always chastise anyone who thinks that government is somehow this omniscient, all-knowing, all benevolent authority, but they're just comprised of human beings who are equally as fallible as you and I.
So true. I mean, we have such great power and such great positive attributes, the fact that we're at our best when things are at the worst. And, there's all these wonderful things we can say about our race. I mean, we've created ourselves as being the apex predator. I mean, we've done some remarkable things. Our technological evolution is godlike, but we got these flaws and we carry them with us every single day, and we cannot walk around pretending them away. They exist and we have to deal with them. It's just part of life.
Well, thank you again, Myles, for coming on. I appreciate your time. I know how busy you are. Where can people find what's the name of your podcast? Where can people find the podcast, and anywhere else you'd like to point people to learn more about what you talk about and what you educate people on? Well,
everything I do is like a one-stop shopping experience for it over at beunconstrained.com. That's my website, and they can find my podcast there. They can find all the things I do, my articles, my courses. We even have a public matrix server, which is a private server where people can, for free, they can create an account, log in, and not be censored by Facebook and YouTube and all these guys. It's a federated public server. So it's kind of like a place people can go for a bit of a breath of fresh air, get a taste of freedom and have a good time.
Awesome. Well, thank you again. I really appreciate your time. And I think you're traveling soon, right? So I hope you have a good trip.
Thank you very much.
Thank you. I appreciate it.